Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. It's an important trading session. We do have a lot of cues coming in as far as the earnings are concerned. And of course, after the fall yesterday, yet again, we have a lot of cues to track. But first up, as always, let's take a look at the Asian markets because they are tracking cues from the US markets. They snapped their 6-day winning streak, so to say. So largely mixed, you can say, for the Asian markets. While the Taiwanese index is seeing cuts of 0.6%, Hang Seng is up around 100 odd points. All of them tracking the big Fed decision that is awaited tomorrow. So the FOMC meet has started today. So 2 days is when it'll go on for. Apart from that, if we look at Nikkei, it is lower in trade. We have Kospi, which is lower in trade as well. Largely in the red, so to say, for the Asian markets. SGX Nifty, that'll come up for you and that'll indicate how the market will move for the Indian markets, at least a 66-point uptick. But do remember, it was indicating a flat to positive start yesterday as well. We did fall, but then again, we did recover from the lows of the day as well. Nifty high by 45 points at the close. But let's talk about the US markets. Wall Street ended Monday's trading session lower with the Dow Jones sliding over 250 points, the S&P 500 down 1.5%, and the Nasdaq Composite closing nearly 2% lower. Note that the street is looking ahead to a raft of tech earnings and the Fed policy decision on Wednesday as well. The big cue from Wall Street is the 2-day FOMC meeting due to begin today. Investors widely expect a 25 basis point increase, but will also monitor commentary on how much further the Fed intends to raise rates. CNBC's Steve Leisman files us this report.
Fed Chair Jay Powell faces a challenge this week to convince markets that rates need to rise and will rise to combat inflation, or maybe even to give in to markets a more dovish view of rates. Here are three. Markets expect a quarter-point hike from the Fed, but the gap between the Fed and the market for the outlook for 2023 stands around 61 basis points. Fed raised its forecast for 2023. Market did not come along. That is, investors decided for now to fight the Fed. So there's three possible outcomes here. The hawkish one would be Fed Chair Powell and the Fed jawboning to saying financial conditions need to be tighter. A neutral outcome could be the Fed saying, you know what, you have your forecast, we have ours, we'll just figure out who's right at the end of this. And not expected, but a dovish outcome would be maybe the Fed says maybe the market has a point of view on inflation and comes a little bit closer to the market on the economic outlook. Market looks to be focused on slowing consumer spending and a sharp decline in inflation over the past several months. The Fed has actually received 2 PCE inflation reports since the last meeting. They show a sharp slowing of headline PCE inflation. That's to 4%, from 4% on a 3-month annualized basis to 2.1 now. Core came down from 5.4 to 3%. That takes out food and energy, obviously. Fed focused on the strong job market, claims running under 200,000 for 4 weeks now, despite many announced layoffs. The unemployment rate ticked down 1/10 since last meeting, and job openings remain elevated at 10.4 million. Market thinks the Fed ought to accentuate the positive of inflation coming down and embrace the negative risk to the economy. Not sure that's going to happen this time, guys.
Okay, all right. So that's, of course, the big update that we are watching out for, the Fed rate hike trajectory going forward and the commentary as well. So that's the global market action. How will these overnight cues and our own domestic cues impact our own markets? Our research team is joining in to tell us just that. And we'll talk about all that. But first up, let's talk about the stocks that have been focused today as well, because a lot of earnings which have trickled in and some stocks on the back of news flow as well. Vivek is here to tell us all that. Hey, Vivek, good morning.
Well, good morning. Quite a few numbers post-market hours yesterday, important to note of them. First on our list is L&T. The company actually declared quite a good quarter. It was mixed in a sense, given the fact that while the order inflow guidance was quite strong, in fact, the manager indicated that it's likely to reach the upper end of the guided band and may exceed it. What actually might disappoint the street is the fact that, the core EBITDA margins was a miss. And in fact, the management has guided down for the core EBITDA margins from 9.5 to 8.9 earlier. So while when you're talking about the revenues largely in line with the estimates. Margins were what missed actually the CNBC TV18 poll. EBITDA margin coming in at 10.9% this particular quarter. Tech Mahindra largely in line set of numbers. Margins were something that was slight beat. However, the outlook was something that was quite muted. So the net profit coming in largely in line with our poll, 1,296 crore is what the net profit stood at. BPCL, a strong set of numbers, beating the CNBC TV18 poll by quite a handsome margin. Net profit coming in at close to 1,960 crore versus our pool of close to 1,430 crore. Inox Leisure, the losses have actually widened on a year-on-year basis. However, the revenue as well as EBITDA have expanded. So, revenues up almost 74% on a year-on-year basis, EBITDA up 30%. However, margins have declined quite significantly, coming in at 33% versus 44.5% last year around. Also, keep an eye out for Aztec Life Sciences. Appears to be quite a subdued set of numbers. Revenues down almost 32%. EBITDA is down almost 72%. Margins to very weak 10.3%. And also keep an eye out for Adani Enterprises. The FPO subscription figures at the end of day 2 continue to remain quite subdued. Today will be very important to track action on that front. And also yesterday, post-market hours, Abu Dhabi-based IHC has invested almost $400 million in the FPO. Keep an eye out for Vodafone Idea and the Teleport pack on the back of the conversion of OTC dues. That's something that's expected today.
Okay, all right. That's a long list, Vivek. Thank you so much for talking to us about all the stocks in news. Let me go across to Nigel now, joining in with all the cues from the F&O space. Hey, Nigel, good morning.
Well, morning. Now, first up, in terms of institutional flows, yesterday the FIs, they sold close to around $800 million in a single trading session. And that's the highest that we've seen all the way since June 2022, mid-June 2022. Institutional numbers, they were negative as well, close to around 1,200 crores on the net sell number. Then you'll wonder, with such intense institutional selling, yet the markets bounced up. One is that it shows a bit of a resilience coming in from our own markets. And second factor is there's clearly a short covering bounce that played out because the Nifty ended higher and you had the open interest that was down by close to around 4 to 5% odd. What do the FIs do in the F&O market? Well, they continue to pile on the shorts. And yesterday as well, they added more than 8,000 contracts on the short side. It takes the short position to around 82%. We know what happens when they go to around 85, 86% odd. In the past, we have seen for a bit of a short covering bounce. Will it come this time or not? Well, my sense is we could be bracing for a bit of a short covering bounce. On the option side, well, they bought more puts than calls. So in case things go wrong, there's a bit of a cushion out there. But it's heartening to see that yesterday they wrote puts as well. And we were making this point yesterday that the 17,500 put, it appears it's being written out there. So some bit of writing gives you a sense that maybe yesterday's low, that 17,350, 17,400 could hold out. You have the Nifty Bank as well. The lows are up for you on the screen. And the 200 DMA. Now that's very, very important. If we break yesterday's lows, then maybe we slide down further. So just keep an eye out on that mark. The SGX Nifty, for starters, well, it was indicating a bit of a positive start. Don't chase the opening. Intraday, you'll get plenty of volatility. You'll see a bit of a downtick. Maybe then risk reward could favor you closer to around yesterday's lows. Back to you.
The International Monetary Fund's latest World Economic Outlook report says India remains a bright spot amid a slowing global economy. The fund sees global growth slowing further in 2023 amid some signs of resilience and reopening of China. Also says the fight against inflation is starting to pay off. Ritu Singh is joining us with all those details. Ritu?
Well, I'll start with India first, where IMF has retained the growth forecast for this fiscal and the next. So India's GDP is seen growing by 6.8% in this year, slowing to 6.1% in FY24 before returning to 6.8% GDP growth by FY25. But that said, IMF did highlight that India remains a bright spot, and together with China, it will account for half of the global growth in this year versus just a tenth for the US and Euro area combined. Global growth is projected to fall from about 3.4% in 2022 to 2.9% this year before it rises to 3.1% in 2024. Now, while the forecast for this year is 20 basis points higher than earlier estimated, it is still below the historical average of 3.8%. IMF says the rise in central bank rates to fight inflation on one hand and Russia's war in Ukraine continue to weigh on economic activity. This decline in global growth is going to be driven by advanced economies, where the slowdown is going to be more pronounced, with 9 out of 10 economies there likely to grow slower. The emerging market and developing economies growth is estimated to have bottomed out in 2022 itself. Now, the balance of risk to this outlook remains tilted to the downside, but IMF believes that the adverse risks have come down. It says that despite these headwinds, global growth outlook is less gloomy than it had earlier anticipated, and that could represent a turning point, with growth bottoming out and inflation declining. A quick word on the inflation, where about 84% of the countries globally are expected to have a lower headline CPI inflation this year compared to the previous year. So global inflation is expected to fall to 6.6% in 2023 and 4.3% by next year. Oil prices projected to fall by about 16% and non-fuel commodity prices by 6.3% on average, according to the IMF.
Ritu, thank you so much for joining us with all of those details. And moving on, ahead of tomorrow's budget, Finance Minister Nirmala Sitharaman will be tabling the economic survey later today. And sources are telling us that the report is likely to peg GDP growth for FY24 at 6 to 6.8%. Shireen Bhan is joining us on the phone line to tell us more. Hey, Shireen, good morning.
Good morning. Yes, absolutely. Today is the day that the government will present the economic survey. And what is important to note is that this is going to be the first economic survey that will be authored by the current Chief Economic Advisor, Anantha Nageshwaran. Remember, last year, on the day of the survey is when Anantha Nageshwaran had joined the government as CEA. So this is going to be his first authored economic survey. Now, the economic survey essentially gives us an indication of the macroeconomic context of the economy. And just as we heard there from Ritu, it will pretty much mirror the kind of projections and estimates that global agencies like the IMF, etc., are putting forward. So we are given to understand, and this is of course source-based information at this point, that the economic survey is likely to estimate the FY24 nominal GDP may grow by about 11%, and real growth is seen at 6.5%. So while it will peg FY24 GDP growth at between 6 to 6.8%, the baseline scenario is likely to be 6.5%. Of course, the survey will also highlight and indicate the global risk factors, and that could have a bearing as far as the FY24 growth forecast and growth projections are concerned. The survey will also articulate and document India's resilience through the global economic volatility and turbulence, and point out the reasons, the drivers for why India has stayed resilient. Capital flows, the survey is likely to indicate that capital flows are likely to return as tightening abates. Again, as we just heard there from Ritu, the IMF is expecting that the worst could be behind us as far as inflation is concerned, and that seems to be the indication that the survey may hold out even as far as India goes. So all eyes on the Finance Minister as she gets ready to table the economic survey. At noon, stay tuned to CNBC TV 18. We'll get you all the fine print and the survey analysis live right here.
Oh, yes, absolutely. Shireen, thank you so much for joining us with all those important details. So economic survey, of course, is something that is a big cue to watch out for today as well. With that, we'll slip into a short break now. But before that, let's listen into what Keshav Bhajanka, who's the Executive Director, Century Ply, expects from this year's budget. Listen in.
Specifically for the wood panel industry, I think that there can be some sort of an impetus given to export of furniture in the form of a PLI scheme or some other scheme. As you know, the world's furniture market is huge, and we are not currently a meaningful exporter as far as furniture is concerned. Secondly, agroforestry is a very, very good way to increase the green cover in the country, to reduce pollution, to give livelihood to n number of farmers, and at the same time to provide raw materials for wood panel related industries as well as paper industries and some others. So I think that if the government can give some sort of a promotional scheme to agroforestry in the budget, that would really go a long way.
Come back, you're still tuned into Power Breakfast, and it's time to talk all about commodities now. A lot of updates in that space as well. Manisha Gupta is joining us with all the updates. Hey Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with crude oil prices because we have seen further declines now. And then the two trading sessions in this week itself, we are 2% down. And this is ahead of the U.S. Fed meeting as well, where we have seen the U.S. dollar strengthen ahead of that. Also, when you look at the markets, the Russian holdings, or rather the loadings, are up 50% in the month of Jan on a month-on-month basis. So that tells you that there's enough availability in the global markets, even after all those sanctions that we've seen on Russia. The Chinese demand continues to support too, and the Israel drone strike on Iran defense facility is something that the markets will continue to keep an eye on. In the meanwhile, we also have seen profit-taking continue in other energy markets. Coal prices now are trading at a 6-month lows. We've seen prices fall below $300 a ton. The U.S. gas prices now are the lowest since April 2021. We've already seen the U.S. gas prices fall by 40% in this month alone, and they're down by 70% from the August highs. Some profit-taking is what we are seeing across boron metals as well. So the copper prices have come off its 7-month highs. There is a decline that we've seen come in for aluminum, zinc, even gold and silver prices are off their Jan 2023 highs. So I think until the US Fed meeting is out of the way, it's going to be a choppy market.
Oh yes, so that's the big cue that we are watching out for, right? Thank you, Manisha, for all those updates as far as the commodity space is concerned. Let's quickly take a look at what the Asian markets are doing. It was a mixed picture earlier as well. And now if we take a look at the Taiwanese markets, they continue to reel under pressure. So that one is down 0.7%. And Hang Seng, which was actually trading in the green, has come off from those levels and is in the red with cuts of around 20 points. So yes, there is some profit taking from the highs. And right now we do not have many Asian indices in the green except for Straits Times. So Taiwanese index down, Kospi is down 0.5%. We have Nikkei sitting with cuts of around 7 points. Hang Seng too has come down. SGX Nifty though has surged a little, so that's up around 74 points. So let's see which way things go for our own markets. But with that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.